Good morning, everybody. This is Steve Levay with the T3 Live Morning Call. This morning we have had some serious volatility off the employment number. Before I got on air here, we were down as low as 176.35 and as high as 178.62. We're right at about 178.15 on the spiders right now. Serious volatility, serious range already this morning. I was looking for a sell-off off of that number. We got a quick one, and now we're rallying. So I'm going to sit back and wait for this market to show me what to do. Talk about a couple of earnings stocks this morning that I will be watching. First and foremost is LinkedIn. Stock currently is down $13. You look at this thing right now. I think 200 will be a buyable level or even a psychological level that you can look at to say, all right, I'm going to buy if it pulls back to here. I've seen LinkedIn in the past rally, from red down this far to green. So I'm going to give it the 5-minute high-low trade on this one. And, again, if you don't know the 5-minute high-low, sign up for a trade the morning free week, and you will learn exactly what that is. Other than LinkedIn, other stocks to watch, Expedia, up $8 on earnings right now. And as you can see, this stock's been in a decent little downward trend right here. And it's breaking out today. We're sitting at 73 right now, so we're above this range. If we look back, we haven't been this high. I think this is the all-time high, or at least recent highs. So I think this thing could probably see 75 without pulling back first. It's $2 away. We'll see what happens. Open Table, OPEN, is another one I'll be watching this morning. Down $6 on earnings. Not looking very pretty. It's now down below the 200-day. At this point, it's sitting around 69.5. The first area of support is right here at about 65 and change. That might be the area right here that they decide to take this stock to. And again, just draw your lines, gang. It's very easy when you draw your lines. You know your support and resistance. Very easy to see where they might take this stock. Other than those three big earnings plays, obviously for me, I'm going to keep an eye on my normals. Let's talk about DDD first. DDD, two decent bounces off the lows of a debacle day on Wednesday when they pre-announced lighter guidance. If this stock can get above yesterday's high, which was 67.18, I think we could run back to 70. I'm not 100. Obviously I'm not 100% sure. But make sure you trade the patterns, gang. This stock is very volatile. It's fallen $40 from the highs, and the whole sector is taking a beating off of these pre-announcements. SSYS, let's throw that one on the screen. That's had a pretty decent 2-day move. And to be honest with you, this one's holding up the best. It had that move down to the 200-day bounce right off that 103.86 area, and back up to about 112.20 where it closed last night. Again, the chart doesn't look pretty, but there is some serious volatility in this. The range is about $5, $10 every day. It's not the easiest stock to trade, but it's one you want to get to look at. You want stocks that have true range, and you want stocks that are going to move. If you're sitting in stocks like, I'll just throw out one that I've been trading recently, Live. Live really doesn't have any range right now. And this is the kind of thing I'm going to try and stay away from. It's got a $1.50 range, a $1 range. When it moves, it breaks out. I mean, this thing went from 26 back down to here, 14. Hasn't had a green day in a while. I will look at it against this low of 13.24. If it can hold that area, they're doing a 3-for-1 split later this month. I'm going to look at this stock for a move back up to 20. But again, that's like my tertiary list of stocks because there's so many other things that I will be watching. Let's take a look at XONE. I forgot to mention that one. This chart is as hideous as you get for first month of the year kind of thing. We started around 70 in January. Here we are now printing down here 38, and right now we're currently down 50 cents on the stock at 41 and change. I mean, you have to stick with these trades that are giving you this kind of volatility. I expect these things, they're going to have earnings at the end of the month. Hopefully, the pre-announcements are out of the way when the earnings come. There's no more downside to these things, but who knows? I hope they don't take the wind out of the sails of these. But again, it's stuff that you have to be aware of. I'm going to trade these until they're not in play anymore. That's what we do in the trade in the morning. We milk these stocks for all we can make out of them When we don't make money in them, we throw them aside and move on to other things. Other stocks I'm looking at, take a look at ORMP. Last week the stock's at $30. Today it's at $13.97. You know, look at this range again. All red bars after they announced good drug news, and here we are. They sell the news type of scenario. A lot of bad news came out over the week and news stories and things like that. I'm looking for a buyable bottom against that low right here, which again is 1386. Excuse me. So 1386 for me will be the area that I look if it holds. If it holds, great. I'm going to look for a bounce. I think what's going to happen is once you see a green bar in this type of move, you might get another day or 2-day move out of it. You know, that's called a change in the guard trade. I'm going to look for that. And that's the kind of things that in our room, that's what we look for. We look for those reasons to get in, catalysts to get in. And, we go from there. So, again, with the market right now, let's just throw the SPYs up. You know, we're up 1270 on the S&Ps, so we're sitting at 178.30. We're right in this range right here where, to me, if we can get above this area, we'd probably rally another $1. I mean, like I said, I'm completely surprised that we're up this much on the spiders. But if we can clear this range, we probably get up here. And then all of a sudden, we're looking at 180 again. That 177 level, we busted through that yesterday. And now here we are at 178. 177 is going to be the level that I short against again if it breaks. We'll just have to play it day by day and see how this market goes. Again, I always stress this in our room. This is a very fickle market. You don't want to be caught with big size and big positions in overnights because this isn't the market that's trending. We're getting 10-point down moves. We're getting 15-point up moves, 20-point down moves, 10-point up moves. So what you want to do is really limit your overnight size and really make sure that you can handle the pain if there's any type of bad news in the stocks that you're long in. And if you can handle any type of pain, long or short actually, then you're doing the right thing. With that, everybody, good luck trading today. I'll talk to you all in the BTF.